Okay, let's turn our attention over to AMD, which is the other name besides NVIDIA that people often like. But, the question is whether or not the recent expectations were just too high, because it did falter and it's down for the month, for example, right? 1 month down 5%, this month down about 4%. Some of your thoughts on where this could be headed, Joe?
Yeah, it's playing second fiddle to NVIDIA in this AI chip race. They just came out with some new chips. I think they're closer to what NVIDIA offers. They don't exactly have the software that AI has on top, or the AI software NVIDIA has on top of their chips, but the chips are fantastic. I think people cannot get the NVIDIA AI chips. They're going to be looking for the next best, and I think that is AMD. And yeah, it's well off of its year-to-date high. That was about 237. I think it makes sense for it to climb back closer to that. I would be looking to add some AMD right here.
AMD met expectations with its first quarter report last month, but overall growth wasn't what investors really wanted. While data center and PC revenues surged, driven by increased demand for artificial intelligence and a recovery in the PC market, the tumbling revenue in the gaming and embedded segments offset those gains. With that being said, many Wall Street firms still think that AMD is a great AI player as the market stabilizes, and one of those firms is Jefferies, which recently upgraded their price target for AMD stock. So keep watching to find out the firm's insane price target and why they're so bullish on AMD stock. Additionally, we're going to talk about two new collaborations AMD announced recently, which rely on the company's new Instinct MI300X accelerator. But before we do that, if you want to keep up with AMD's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates. Now, back to today's video.
I remember back in the day, the argument made by Cathie Wood over at ARK Invest, right, was that technological innovation was ultimately going to be deflationary for the overall economy, that productivity increases, that sort of thing happen. Does that mean that over the long term, investors need exposure to technology because it is a hedge against inflation in terms of growth and higher prices, but also because it helps battle inflation as well? Do people need to buy tech on the dip?
Well, it's one of the only tools right now that will slow inflation. All the other pressure is pushing up. You see that in the insurance benefits market. You see that in insurance. There's just a real press for prices to go up. And the tool companies have to fight that is efficiency. And technology will be the source for that. Tech-enabled companies will have to compete. They're the best position to compete. If they're using technology to their advantage, they will become the market leaders. So we think that the emphasis on tech growth stock remains because we don't see inflation going away. And one of the drivers, one of the reasons is because tech will become a way for companies to actually lower costs in the face of all these higher wage and benefit production supply chain costs.
Jefferies analyst Blaine Curtis recently wrote that he expects AMD to benefit from a strong upcycle in the semiconductor market and soaring demand for AI chips. In fact, the AI chips market, which was valued at $23 billion in 2023, is set to grow by 30% in 2024 before soaring to more than $150 billion by 2030. This is why Curtis has a buy rating on AMD stock and a $190 price target, which represents an upside of around 25% as of the time of this video. Now, there's no denying that AMD's main competitor, NVIDIA, has benefited the most from soaring demand for AI chips. However, AMD is starting to catch up with the company's latest MI300 family of data center GPUs, which surpassed $1 billion in revenue since its launch, and is now expected to bring in $4 billion in revenue this year. AI can also drive demand in other areas, and as companies invest in AI chips, they'll need other data center hardware, and in the data center market, AMD is in a strong position. In fact, AMD's data center division sales are up 80% year over year, hitting a record $2.3 billion in Q1 2024. Additionally, The data center segment's operating income surged to $541 million during the same time last year, a stunning leap from $148 million. And operational income increased from 11% to 23% of revenue in the preceding year. The significant increase in operating income indicates AMD's enhanced profitability and operational edge in the data center business. Overall, despite large expenditures on marketing and research to capitalize on AI's potential, AMD still raised operational income by more than threefold. Demand for AMD's data center products is shown clearly with the company's strategic partnerships and collaborations, and the company recently announced two that are enabling a new era of compute and AI. So, let's find out what they are. Hello everyone, and welcome back to Investocracy. AMD recently announced that Optiva, a market maker trading on more than 100 exchanges, is using a broad range of AMD high-performance compute engines to help further its mission of improving financial markets by building a modern infrastructure that serves as the backbone of the organization. Optiva is addressing technical challenges in capital markets to build systems that make financial markets more advanced, using AMD EPYC processors, AMD SolarFlare Ethernet adapters, AMD Vertex FPGAs, and AMD Alveo adaptable accelerators. Moreover, AMD announced another collaboration with Eviden, a business unit of the Eidos Group specializing in advanced computing. They have announced the release of the Bull-Sequana AI 600, a mid-range artificial intelligence server family. This new series features the AMD Instinct MI300X accelerator and targets businesses requiring 8 GPU servers for AI development. Additionally, it aims to provide a balance between cost and performance, ensuring customers receive value for their investment. It boasts substantial compute capabilities and is designed to assist developers, data scientists, and researchers in advancing innovation and computation. With that being said, AMD's innovative technologies are being adopted by major players in the financial and technology sectors to advance their capabilities, which helps AMD establish itself as one of the leading companies in the AI market. If you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
It's time for our cash tag segment. For that, let's bring in Megan Brantley, Vice President of Research at Likefolio. Welcome back to the show, Megan.
Thanks for having me, guys. Happy Friday.
Happy Friday to you. So we're talking AMD, the competitor now to NVIDIA in the AI chip space. But Megan, this stock sold off over $30 or 30% from its all-time highs that we saw in March. So we're seeing some weakening moves on the stock. Does your data support this weakness?
So this is one of those instances when we look at that we start to see some divergence. And what I mean by that is we see consumer sentiment and consumer interest heading in one direction and the stock heading in the other. So you mentioned we've got a bit of a pullback unfolding right now, but our data, we actually show considerable growth. Mentioned volume has increased by about 18% year over year. And that's mostly driven by its Ryzen product lineup. So something that we've got an eye on, and you can see that on this chart here on the very far right side of that chart, you can start to see a gap between that mentioned volume and where the stock is trading currently. So this is something that we personally love to see because we feel like this gives our data a bit of an edge, and especially where we expect the stock to be trading in the future. And another thing that I think is really interesting is whenever you look at a pie chart of all of the consumer mentions for the chip companies that we follow. So that's AMD, that's NVIDIA, and that's Intel. And what's happening here is that AMD piece of the pie is getting larger. So consumer interest in AMD and its products is growing, and it's chipping away, especially at that Intel piece of the pie. And it's even starting to chip away a little bit at the NVIDIA piece. Now, obviously, NVIDIA is still much larger, but this is something interesting to see, especially when you consider the stock performance, that now the bar might be a bit lower. It definitely makes a bullish play very enticing.
AMD is also becoming a leader in the supercomputer market. According to Wells Fargo analysts, AMD, as well as NVIDIA, are expanding their presence in high-end supercomputing at a steady pace, which is a key indicator of competitive positioning in the semiconductor space. AMD's share gains are obvious, with 157 supercomputer systems based on the AMD EPYC CPUs, up from 140 in November 2023, 121 in June 2023, and 101 in November 2022. Comparatively, there are 196 systems currently using NVIDIA's GPUs. AMD EPYC CPU cores expanded to 26%, up from around 24% and 20% in the November 2023 and June 2023 lists, respectively. This is a big opportunity for AMD because the supercomputer market is set to hit $25 billion by 2032 at a compound annual growth rate of 11%. So, even capturing just 10% of this market could add $2.5 billion to AMD's revenue by 2032. And when it comes to AMD's main market, the PC market, AMD still has a lot of room to grow, especially as big AMD customers like Microsoft push AI for PCs. AMD increased its share in this market by 4.7% year-on-year, giving it 23.9% of the x86-based desktop market. Also, AMD's share of revenue from desktop PC sales was 19.2%, up from 15.4% a year earlier. Moreover, AMD's share of the laptop market increased from 16.2% in the first quarter of 2023 to 19.3% in the first quarter of 2024. In addition to that, revenue in AMD's client segment, which includes CPU sales income, increased by 85% to $1.4 billion. This increase represents improvements in the PC market, which could fuel growth in the foreseeable future.
Let's talk about where you think, Ben, this is headed and why.
Well, I understand the idea of trying to find a bargain here, and I like the idea in terms of our last example about, still kind of trying to play that range, but these are stocks that have been in a bit of a downtrend as of recent. So again, I tend to favor the migration of value, which in this case has been lower. Let's take a look at a couple time frames. I'll show you exactly what I'm talking about. First and foremost, I've got hourly candles here. We were talking about our last example in terms of some of the weakness we've seen since the beginning of the year. This one's been struggling since March. Look at this, up around 227, bottoming out recently around the, well, we'll call it 140, 150 area, and you can also see along the way down some areas of consolidation of the form. We're currently bouncing around this 152 level. So the way I see it, as long as we hold below 170, the bears are still in charge, right? We're talking about areas of consolidation that continue to form at lower and lower levels. Bears are actually looking for a breakout to the downside, and new area of value to form at a lower level. They don't want to see us take out 170. That's kind of the line in the sand in terms of that key level of the upside. But another good example of where we could just be in somewhat of a range-bound type trade. We are hanging out right on that pivot right now. Got a pretty well-defined upper extreme, pretty well-defined lower extreme in this, again, consolidation area that we formed, value area, accepting the trend lower that we've seen and zero rejection of it. Speaking of rejection, this is what it looks like when you V-top, when you come off a key area, and then you invalidate the working assumption that we were trending higher. Let me draw some areas on this chart as well so you can see exactly what I'm talking about. On the run-up that we saw in 96, 120, areas of consolidation forming at higher and higher levels, that goes all the way back to the fall of last year, November. But look at this, topping out at 227 in February, and look at the declines we've seen. Taking out 170, right? That was the key area, the line in the sand, because when we kind of went sideways up here around 205, the bulls wanted to see a new area of value form at a higher level. Look, we break out, fail that, take out 170. Look what's happened since. Basically, that recent move, but breach of 170 was not what the bulls wanted to see. I've got one more chart to show you a look at where we are relative to the 50, the 200-day moving average. We were talking about our last example and the significance associated with the 50 in terms of Cisco. Well, teetering around that $49 level. Look what's going on with shares of AMD. We've already taken out that 50-day moving average. Now we're nearing that 200. So RSI supportive of what we've seen in terms of recent weakness. This one looks to me like it's trending lower off those recent highs.
Okay, thank you for that. Final thoughts on this one, Joe, and then we got to get to Amazon.
Totally agree. Coming close to that 200-day moving average, I think we got very close about a week and a half ago, maybe the start of May at a 200-day moving average. I think hopefully we're trying to find a base there. It's exactly where I'm looking for that value, around that 200-day moving average.
AMD's business has exploded over the past decade, with its stock skyrocketing nearly 4,000%. The company's CPU market share rose from 18% in 2017 to 33% this year. AMD is also in better financial standing with free cash flow of $1 billion, which suggests that the company has the financial resources to keep investing aggressively in growth initiatives, especially in AI. So, while the technical analysis might not be good as we saw in the video, there's more to a stock and a company than a chart, and AMD bears aren't seeing the huge growth prospects that this company has. In fact, AMD stock was trading below the 50 and 200 last year in October, but it still skyrocketed. Therefore, what you need to do if you're thinking about investing in AMD is do your own due diligence and trust your gut. So, what do you think about AMD stock? And what are your expectations for AMD's future? Let us know your thoughts in the comment section, and don't forget to tell us what your valuation for AMD is. If you would like to know more about the latest updates about companies like AMD, then go ahead and click on the next video on your screen.